The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, the markets on Monday were pretty quiet across the board. Grains and livestock trade. Maybe everyone took an unofficial holiday to watch the solar eclipse, potentially. Not sure, but still just a quiet start to the week. We do have a USDA report coming up on Thursday that we need to talk about. That and more. We're going to go through things. Joining us today for market analysis, John Heimberg with Total Farm Marketing is with us here. John, thanks for being with us again this week. And man, oh man, I tell you what, I think the solar eclipse madness must have got the trade on Monday because there just wasn't too much going on. Kind of two-sided action with the KC and Minneapolis week continuing to kind of be our upside leader, although that was pretty muted on the day as well Monday.
Yeah, pretty quiet day today when you look over the markets in general, just no real direction for anything. And some of that may have been tied to outside markets as well. We had kind of a bit of a turnover in crude, and that kind of fell through a little bit more today. And just seeing some weakness there based off maybe the Middle East tensions are here or there. But again, I think that did weigh on the soybean market and maybe just calm down some of the buying and commodity spaces in general. We had a decent night at the wheat market, whether that was tied to the Ukraine. Some chatter over there too regarding one of the nuclear reactors again. I just still think we're seeing some good short covering in that wheat market from time to time. Then the reality still sets in that prices are just not competitive on the global scale, and that just limits anything that we got to rally inside of it. Same things happen in the corn market, just from talking to producers and end users right now. End users are not concerned about where they're getting their supplies from for corn. They know there's plenty on farm. They bid up a little when they want to get it in, but then when they get their maximums reached, they back off that cash price. Producers aren't going to sell if the price gets too low. So what that gives us? 6 cents trading range on the lead month, and again, another day of sideways trade in that corn market.
Well, thinking about these markets and specifically corn to start, we got a WASDE report coming up on Thursday. With quiet action, with spring planting trying to get underway here, a lot of those first insurance dates happening this week across the country. I mean, your perspective as you take the March numbers and plug those into your balance sheets and think about what some of the projections are for this WASDE report. I mean, is there anything of major note that we really need to be considerate of here ahead of this WASDE report on Thursday, John, on the corn side?
Typically not in the April report. We're not going to see anything in terms of production. It'll be line item adjustments according to the demand side. They'll take a look at those grain stocks numbers that we had here at the end of March. They'll have to plug in that deficit that we saw according to expectations in terms of the corn market. We'll see some carryout reduction, whether that'll be through a demand uptick, probably raise exports up a little bit, probably raise up the ethanol grind a little bit in that regard. That could give us a cutback. Looking at estimates now, taking carryout down about 60 million bushels. We're about 80 million bushels behind on the grain stock side. So that'll be the biggest thing, is how the market handles that. To me, going forward for the corn market here, this is the month of April, and we've seen this as a trend before. Basis contracts that were due for May are due at the end of the month. We saw selling in November for those December contracts. We saw selling in February for those March contracts. And I think that's going to be a limiting piece of the puzzle here as we get further into the month of April in terms of that basis contract and the producers having to make a decision. Do we price or do we roll? Last year, we had about an 80-cent drop. Now, we were obviously much more elevated in price and than we are now, but it was about a 12 to 15% drop in corn prices. You translate that over to the current price levels they're at, that could get us about a 25 to 30 cent drop in price just going into those basis windows. Again, we just set so much corn on that front end of the market that needs to find a home, needs to get a price stuck to it somewhere. That the market's going to have some of those week longs hung out to dry. And unfortunately, in this case, again, it very well could be the producer with those basis contracts are those week longs.
Yeah, it feels like that we need to look back at some of those scenarios we saw back in February, back in November, and to the farmer side here, maybe take from that and try to position a little bit earlier if they can. I mean, what are some thoughts there, John?
Yeah, a couple different things to look at. Number one, if you want to hold it and see if we get some type of a move, and but come in and pick up a put. They're cheap right now to get us through the next month or two. You can go out and pick up a June put to get you through into that May window. May puts will drop off here before around before we hit first notice day. So that's something we got to keep a look at. They're not expensive. The volatility is low, so you can put a pretty good floor into the market if you really are convinced that prices could work higher. The other side of it too, yeah, be active. I just from talking to my producers, had one today. All of a sudden, he got a little basis bump. 10 cents was knocked off. He decided to pull the trigger, sell some cash, and that again tells me we got a pretty good supply of corn in the front of the market. And when an end user needs some, they throw a little discount or throw a break out there in terms of that basis. Get some bushels moving. When they're done, boom, they close that opportunity down. So producers need to just stay active in the cash market right now. If they got stuff they have to move here, just because of how this market's going to play. Funds that we saw last week, they pushed that short position back larger again. There's just not a real reason at this time frame for them to get out of that short position, as disappointing as it is, at this time frame, like I said. So with that, the market's not going to really take off or go anywhere. And actually, I'm a little more fearful that we get one more downside test to this again before maybe we can finally find ourselves a bit of a bottom. I mean, I still like that February low. That could be our spring low right now, but it wouldn't shock me that over the next couple of weeks, especially if things start kind of falling apart on the technical side with those basis contracts coming, that you could see one more push to go retest those numbers in terms of that February low.
How about the soybean market, John? I feel like I'm eating my words a little bit here that soybeans on the board have hung in this $11 window for a lot longer than I thought they would. I know bean oil has been finding some pressure here with world veg oil values kind of pulling back in recent days. But your thoughts on this soy complex? Anything different? Anything big you're watching here really that producers need to keep in mind, John?
One of the biggest things I'm watching right now too is what's going on with the Brazil price for beans. Okay. And, we've talked about that premium, that discount the U.S. beans. And that was one of my questions. Okay. We got an early harvest. Supplies hit the market quickly. We actually had worse premiums than last year. And that really is what weighed on the soybean market in the early stages to get us to that February low before we turn it around. But realistically, Brazil soybean basis, since its lows, is now firmed about 90 cents. Now, U.S. beans are still trading 50, 60 cents above the board, so we're still at a premium to them, but that's at least allowed the market to maybe say, hey, we got a little stability here because here's our number one competitor, and their prices are on the rise. It's real hard for our prices to fall apart, but in this case, at least we're kind of holding in. Now, here comes Argentina beans. That's the next things down the pipeline. Watching the soybean meal market, what happens there if that competition for soybean meal starts kicking in here a little bit as those Argentina beans hit the processors. So we'll have to keep an eye on that. Obviously, they're looking at a very strong crop this year compared to the last two drought-stricken years. Then you did mention the oil side of it. I think that was the weakness today in beans was bean oil. We saw crude oil turnover, like I said, on Friday and follow through a little bit here today. That sent that bean oil market down. Now, bean oil has been trending sideways here for a couple of weeks, so it's setting itself up for a move one way or another. So we'll have to see. But again, if bean oil were to find some legs again, soybean meal stay competitive, the bean market might at least be finding a bit of a spot here where it can stay in and hold down again. Now, again, we're not ready to take off and go run into $13 beans or anything, but at least maybe we're getting through the bulk of the South American harvest without any more damage. You got to look at where we were last year. Beans were significantly higher. Obviously, inflation and the volatility of things of that nature were and part of that price. But those supplies and carryover weren't that much lower than we are currently, and so maybe things are a little undervalued here. It still comes down to the end user. It still comes down to the Chinese demand. What happens with crush margins? All those things come into play. But at least there's a couple pieces. Like you, I was pretty negative the bean market, waiting for one more break, but now kind of looking at the big picture here, maybe it's a spot that prices can at least hold, but I'm also still fearful that we get one more push somewhere just because we can do that.
We are talking today with John Heimberg from Total Farm Marketing here on Market Talk. John, one more thought here in this overall grain trade. It feels like largely these markets in a little bit of a lull here as we really, the next 4 to 6 weeks ramp up U.S. spring planting. U.S. weather going to come more into focus here, it feels like, here over the next month or so, and largely just lacking any other fresh story. It just feels like that with this planting window right now, we're kind of just in a bit of a lull here in the grain markets, John.
I would agree totally to that. Again, without any real driver for news, it's going to be very difficult here. And the market's going to be watching U.S. weather very, very closely. There's still a few things out there that are concerned, maybe a little bit wetter in the east than we want, maybe a little drier still in the west than we want. But on top of that, at least from the corn market side, the biggest corn crop in the world for in terms of production is still the U.S. corn crop. So that U.S. weather is going to shift its focus into a major player pretty quickly, even probably more than the Brazilian weather as we focus on that second crop. So, right now, like I said, I'm kind of saying there's not a whole lot of stories to move this thing. But if all of a sudden we get a couple of weeks where weather changes or we start to see some pattern changes, these funds are still sitting on a heavy short position, that could bring some of that short covering, that trigger, that opportunity for producers to make sales. But just remember this year, if we have any price rallies, they're going to be met by sales, and they're going to be met by a supply picture that's still going to be deemed as heavy, barring a major impact in terms of weather.
John, let's talk livestock. That cattle market on Monday, especially on the fat side, nice recovery. Beef cutouts had a really strong day Monday to kind of help support things here after all the volatility we got last week with the cattle markets and the avian flu. Feels like maybe, knock on wood, Monday, a little bit of stabilization here in the future side of things. What do you think?
At least for a day, we'll see. We also had options expiration on Friday for April options, and I think that was a big part of Friday's sell-off as well. Just like in the grain markets, we talk about moving to the area of largest open interest. For April, it was the 178 strike for puts and calls, and that's where we fell to on Friday's trade. Is the market just cleans up some of those long calls and makes people with puts wonder what they're going to do, if they're going to hold the position or not. So that causes that extra volatility. Now, nice day today. You mentioned it. Big pop in retail values. We needed to see that. We broke under $300 for choice carcasses last week. First time in quite a while. We've been there. Now we popped right back over with a strong day today. The interesting part of right now, the choice select spread with today's trades at midday was only like about 20 cents apart. So that's usually not typical of a market that's got a lot of demand in it. So we usually see that choice run out against the select. So maybe right now demand is a little bit of a concern. But we're through the Easter window. We're now into April. Weather forecasts look to be improving. Can we possibly get a little push now on that retail side? Hey, I put some beef on the grill this weekend, so that might be the trend that we start seeing. The other side of it too, June just looks a little cheap here. We got cash trade, high end 188 for the north, 184 in the south. You get June trading at 172 on the open today. That's a pretty big discount to cash. Plus also now April's in first notice day, so we'll see if there's any cattle coming into deliveries over the next handful of days here. So there's some things that could get this market maybe working back to where it should be. Maybe not back to the 190s, but let's get June back up into that 180 window here. So that'll be something I'll be watching going forward. But at the same time, we are not out of the woods. All we did was have an update within that big range on Friday. To me, we need to see some follow through tomorrow, get back and challenge some levels of resistance up above this market. Then we'll see if we truly have a turn. But we did come pretty close to my low side target on that June contract around 171 on Friday. So we'll have to see if that's a spot that this market can find some footing. Then you get a headline like we saw today on one of the AP wires, South Dakota cattle prices hitting record high, 300,000 head less than 2019. That fundamental is not out there. Now maybe the news cycle is working past the avian flu story, and we can see that money come back into the cattle market.
Yeah, and that's a great point. It felt like a lot of last week's moves was uncertainty, psychological in nature. You brought up options expiration. That's a great point there. I didn't even think about that on Friday's trade, but largely it felt like a lot of it was just that psychological sentiment and the unknown that really drove the cattle markets last week, John.
Very much so. And then you had the funds selling on a pretty big long position, and they were already starting to peel that back a little bit. And it just became easy to hit the sell button and still probably, hold on to some gains from when they got in those positions. So a lot of it was money flow. last week, but there was a reason for that concern, and the market reacted accordingly. As much as we hated it, concern was, could demand fall apart because of the avian flu story? Charts broke apart technically. Sell. We flipped that to the grain markets. I'm looking for that story to say buy, and we don't have that yet. So now we'll see if the cattle market can find some stability here, over the next couple of weeks.
Any notes for you in the hog markets here as we kick off the week, John?
It looks extremely valued right now, especially those summer months pushing higher again today, 110 out in July. It's just one of those markets that you got to be careful of. As much as it likes to go down at a very quick pace, this market could turn over and V bottom or V top when we see these big moves. So it's an area right now, if I'm a producer, I'm definitely making sure I got some type of protection under here. The hog markets, the corner of the hog and pigs numbers were borderline heavy. So that still has me a little bit questionable, but we've seen a nice move in the cash market. We've seen a nice move in the retail market. That's helping fuel this rally. But again, like most of these cattle markets or hog market type trades, they can hit their peak very, very quickly, and hogs seem to V bottom or V top much faster than even cattle does.
John, anything final for us here you want to reiterate or throw out to folks here on today's show?
We didn't touch on dairy today, but maybe we're finally getting a little life in that market. It's just saw cheese trade snap around. We're back to 150 plus on cheese. So all of a sudden, the dairy market that was starting to look pretty rough is starting to come around. Again, maybe we're getting past that news cycle on the avian influenza. I think that's a big key. It keeps me a little more optimistic. The cattle market too, because of that news headline, maybe moving past the front page status. So that might be a market we see some recovery. Overall, though, for producers right now, look at the value, see where things are, take advantage of things. Don't fall asleep on this corn market, possibly going back down again, especially with this window here for basis contracts. Just being active in terms of your cash market, because the futures market's probably not going to do a whole lot in here over the next handful of weeks. So you're going to get your breaks on the basis if somebody needs something to fill for that cash market.
John, if folks want to reach out to you, if they have questions, want to talk markets, I know they can reach you many ways there at Total Farm Marketing. How can they get a hold of you?
Sure, love to chat with them anytime. Give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. And again, don't forget that website of ours, totalfarmmarketing.com.
And with that, John Heimberg, Total Farm Marketing, always good to talk with you, my friend. Thanks for joining us. Have a great week. We'll talk to you next week.
Sounds good. Have a great week.
That's going to do it for Market Talk. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@markettalkag and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.